Good morning. Apologies for the delay. Little technical issues. Welcome to Power Hour. It's Friday, January 31st, the last trading day of the month. Option expiration day. I have some options expiring, hopefully worthless, because I'm short. But welcome to Power Hour. Every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Continued with Mondays, 10 a.m. Pacific, 1 p.m. Eastern for Trading with Sergio. This Monday, as I promised, I'm going to discuss amongst what I'm expecting for the week, Mag 7 earnings, all that stuff, but I'm going to put up my January results. As I promised, I'm going to do it this year. Every month at the end of the month. I think every week is too much. It's just too much volatility. But again, I trade equity, meaning I look at my equity. Equity is the scoreboard, meaning your account net worth. That does not lie. The only way it will differ is if you add funds or subtract funds. But I don't do that with my trading account. I've never done that. The only thing this year is I started where I ended it. So last year I started with 50K like I did for the last 6 years. I ended up, I think, about 108 and about 120%, which is less than some of the Congress members they did, which is fine. I'm happy with 120%. But this year, expecting volatility to go up, I left the account as is. I didn't touch it. I didn't take anything out of it. So I'm rolling the dice with a 6-figure account as opposed to 5-figure account. Not about flexing. It's about, I'm explaining this to you how I did it. It's, I'm sure there are people with millions of dollars worth of accounts, but the point is percentages are percentages and equity is equity. Whatever you see on your account at the end of the day is what you have if you were to liquidate everything at that moment. And I do have tons of positions now, right? And, swing trade it. Sometimes short term, sometimes longer term, depending on what I'm seeing. Had a lot of volatility this week. I think one of my predictions is coming already true in the first month of the year. We had a lot more volatility in January than we did all last year, actually, up and down, right? We had the DeepSeek R1 situation last weekend, and Monday market just died, right? And then huge comeback now. So seems like 2025, it may be that every dip must be bought again. But so join me on Monday where I'll put up the slides and show you guys the percentages for January. I know month to month is a little probably, I don't know. I think month to month is more transparency as opposed to holding in the year at the end of the year, say, oh, look at me, I did this. Month to month is quite enough, I think. So we'll do that on Monday. So, and last but not least, thank you for the support on the channel. It's growing. I appreciate it. Please share. Please put a thumbs up. It's free. Just a little touch on the screen. Supposedly it helps with the YouTube algorithm. What are we going to do today? Well, I forgot. We had an emergency. We had an emergency members live yesterday because I'm turning quite bullish actually on China. And you guys may say, well, Serge, there's nothing good happening in China, right? I mean, the real estate market is in shambles. There's nothing but bad news. Trump is about to put tariffs on. Well, not about to, he did, right? 10% supposedly. But then, over the last 35 years, I have learned to read the tea leaves in a way that kind of gives me like a little bit of a heads up on what's happening. So I'll discuss that, on the first topic segment, as I usually do. I'll talk about 5-6 topics, and then we'll go into my position screen. And that's it. We'll say goodbye, and we'll see you guys on Monday. Monday should be good because today's January 31st, happened to be the last day of the trading month, and happened to be option expiration, so the account will look a lot cleaner because I have a lot of things expiring today. in favor of me at the moment, but we have 3 hours. Anything can happen in 3 hours. Yeah, so that's that. And so the members only meeting was about, because I'm trying to structure a few different ideas or trades on short, medium, long-term plays in China. If you've been following me for a while, I've been talking about basically the same stocks, because what I want to do in China, I want to just stick with their Mag 7, just like we have our Mag 7, they have their Mag 7. And I'll talk about that in the next segment. And so if you choose to become a member, like I have, I think 27 or 28 members now, obviously there's a monthly cost, but I think the value that you're receiving out of that is ridiculous. Okay. And again, I'm not doing it for the money, but we got to do something out of it. You can't do it for free. This is for free. So as a member, you will get 4 extra live streams and sometimes an emergency one, because a lot of people could not understand the structure of the option trading, and I explained it. I thought it went well. And so as a member, you get 4 extra live streams, which are Wednesdays at 3 p.m. Pacific, 1 p.m. Eastern, to be determined, the time, because of my son's soccer schedule. So you get that. You get the free replays, obviously. If you're a member and you couldn't catch it, you can catch it free after the fact. You get direct access to me through a Telegram chat group, which we have 17 members, I think, in the Telegram chat group already. And that group is on fire. There are some really good ideas floating around. It's a two-way highway kind of a situation. And my light's flickering. Don't buy anything on Temu. I hate this little light, so it's okay. So we're having a exchange of ideas. They're learning quite a bit. They're asking important questions. Again, none of this is investing or trading advice. You have to do your own due diligence and figure out what you're doing. But I do put my trades live there. Like when I'm executing something, I'll put it there. You want to do it, do it. You don't want to do it, don't do it. That's all up to you. And the last thing you get as a member is this wonderful black t-shirt with gold lettering that says #KnowYourWorth. Coincidentally, our Telegram group is called #KnowYourWorth group. So if you guys want to support the channel that way, just click on join on the YouTube page and you'll become a member. You'll have direct access, and I think that's a lot. I'm offering a lot. One of the members actually suggested yesterday, I think it was Edward, said, this feels like thievery. We're like stealing. So why don't you raise the membership? I'm like, I'm not in it for that money. I'm making enough money on my trading account. I like helping people. I like how I'm going, paying forward. So, it'll stay at the level that it is. It's something fun, right? Maybe it'll buy me a decent dinner with the family out or something. That's all I'm looking at. So, good. Okay, I'll answer the questions again and the comments later. But so let's get right into it. So I have been turning bullish on China for the last 3-4 weeks now. And if you guys have been following me for a while, when I first started the channel, I think it was May, June last year, I had a long-term position in my long-term investing account in Alibaba, which is, let's say, the equal of Amazon in the US. And it was about mid-70s, and then, somehow it took off, went up to 120 range. I did liquidate that position about 110 range. It went a little higher, but then it pulled back all the way again to into the 80s, low 80s. And then we'll see, when you guys see my watch list, you guys understand what's happening there. But the first topic I want to talk about today is main reasons, 4 or 5 reasons why I think actually the Chinese stock market, or basically their Mag 7, is going to outperform our Mag 7 in 2025. So our Mag 7 had a wonderful, wonderful 2 years, right? We know what happened to the triple Qs. And a lot of the Chinese Max 7, such as Alibaba, JD Universe, Uniphase, Baidu, Bilibili, all these stocks, they've been meandering. They haven't done anything. In fact, you know, and during the members only live yesterday, we went back looking at 3, 5, 7, 10-year charts. Alibaba is where it was 10 years ago. Bilibili is where it was 10 years ago. JD Uniphase a little higher. Baidu, same place as it was 10 years ago. So these stocks have not moved at all. I mean, in fact, they have come down. So if you factor in what the market has done, our markets have done over the last 10 years, and what our Max 7 has done, you know, comparatively. So number one reason is I think comparatively they're cheap. They cater to 1.5 billion people in China. Their market is large enough, right? Another reason that I'm thinking Chinese stocks are going to, Chinese Max 7 specifically, main, you know, mega caps are going to outperform the US counterparts is because China has announced massive, massive stimulus, okay? Their real estate market has been in the toilet for a while. They're cutting interest rates in China. They're pumping money just like our Federal Reserve has done here to get us out of the situation with the pandemic. That's the number two reason, right? Massive stimulus is coming in. Now, is that going to blow up their debt to GDP? Probably will, but stimulus always puts a, you know, bottom or a floor in their markets. Another thing that they're doing, which I'm quite familiar with, is this. So as we know, a lot of things are manipulated in China. I get it. I understand it. I understand how their system works. So the, you know, China urges state-backed funds to buy more stocks amid market slump, falling bond yields. Well, yeah. So when the yields are going down, it's helpful to their stock market, obviously. And China's financial regulators on Thursday, in fact, last Thursday, unveiled a slew of measures, which is on top of cutting interest rates, on top of QE, their version of QE, which is quantitative easing. And they want to basically put a backstop in their stock market. And big state-backed insurance firms are guided to raise the size and proportion of their investment in Chinese A shares. Oh, I must have bought or sold something. So the regulators on Thursday said they need to allocate, they could allocate 30% of the newly generated premiums to buy stocks. Well, that puts a floor, number one, right? Whatever you do, obviously depends on the stock that you're dealing with, but I'm very, very bullish. Another reason is over my 30 years of watching these things, right? When there's nothing but bad news on a stock, I have never seen a stock go up. Well, we bought something else or sold something else. So over the last 3 weeks, 4 weeks, so what is the bad news? Macro, bad news. Trump for China, bad news. Tariffs coming, bad news. Their real estate market in the toilet, bad news. Just bad news. Nothing but bad news, except one thing is happening. You must watch price action. What has been happening to Alibaba over the last 3-4 weeks? What has been happening to JDS Uniphase over the last 3-4 weeks? Baidu, PDD, which is Pinduoduo, which is the owner of Temu, Bilibili, which is their YouTube. What has been happening to these stocks? You would expect them to go down with bad news, right? Coincidentally, not only they're not going down, their price action is showing me that actually Alibaba has moved from about 85 to 100 already, right? And JDSU, same thing. So the price action is telling me there's accumulation happening on these stocks. So my experience over the last 35 years is that if there's nothing but bad news, the stock chart should look like from the upper left-hand corner to the lower right-hand corner, okay? Well, the opposite is happening. There's bad news and stocks are not going down any longer. So you're seeing this kind of a support or outperformance. And so I structured a few trades around Baba and Billy, and we'll see where we go. But I definitely think Chinese Max 7 is going to outperform the US counterparts this year. So It's January, it's early. We'll see. We'll see if that prediction holds true or not. So I quite often talk about debasing of the US dollar, right? Debasing of the US dollar creates inflation in this country. And then basically our US dollar's buying power keeps losing value, right? We have the same nominal $100 bill that we're looking at, but the value is not there. You can't buy the same amount of goods you did 5 years ago, 8 years ago, 10 years ago. So, but the reason that's happening is because our federal government is running massive, massive debts and deficits. So our national debt is up to $36.3 trillion. We're paying $1.2 trillion a year interest on this, okay? Trillion with a T. And the debt in the next 70 days is going to hit 37 trillion because the debt goes up by $1 trillion every 100 days in this country, the national debt. So what does that do, right? And the reason for that is we have a drunken sailor spending Washington that just loves spending money they don't have, okay? And in order to facilitate that spending and the deficit between what's coming into the Treasury versus what's being spent, the Federal Reserve has to issue bonds and to print money. That's the only way we can balance the budget. There's no other way. So all that printing has done what? Look at all the hard assets around you. Gold, which I'm going to talk about now, new all-time high. That's with gold hitting new all-time highs with the bond yields going higher by 100 basis points, US dollar at an all-time high against other currencies, and gold is hitting new all-time highs every day. Why is that? Well, it's a hard asset that we bought something else. It's a hard asset that keeps pace with inflation or hedges you against inflation. That's where we are with gold. And look at all the other hard assets. Look at the stock market, almost at new all-time highs. Real estate, new all-time highs. Bitcoin, almost at a new all-time high. So this debasing of the currency, the pumping of the dollars into the system is creating inflation. And although Federal Reserve, said this week that inflation may be beaten, I don't think so. I think inflation is coming back. That's why the bonds market is raising yields. But even as the US dollar and the Treasury yields have surged, gold continues to rise, which is completely the opposite. You should expect the opposite to happen. The relative strength of gold has been incredible, no question about it. And gold prices are now up 40% in 12 months. 40%. It's beating the S&P 500 handily. It's getting close to Bitcoin, actually. As the US dollar and interest rates are up sharply. This has never happened in history, and I completely agree. So why is that? Why is gold surging? Well, gold is surging because the markets, there's two reasons for it. The markets don't believe that inflation is dead. Okay, they don't. The Federal Reserve can gaslight all they want. In fact, Mr. Powell gaslighted some more this last Wednesday when they, announced the Fed meeting results from last month, where they had cut the rates by 25 basis points. So the Federal Reserve trying to lower rates. The bond market's raising rates because of that, because of the differential, because the whole world is cutting rates, by the way. Europe is cutting rates, China is cutting rates. So the difference between our interest rates and theirs is getting wider. That's why the dollar is getting stronger, okay, against other currencies. Well, in history, every time that has happened, when interest rates go up and dollar gets strong, gold goes down, right? Well, it's not happening this time. This time, a lot of countries actually are buying tons of gold because one way or another, you have to protect yourself against this debasing of the US dollar, inflation, and gold happens to be a decent inflation hedge. And that's probably the main reason that all this is happening. I mean, I am convinced that everybody should have, 5-6% of their assets in hard assets, probably more in this stage of, depending on the stage of your life, but at this stage, with what's happening with the inflation, with what's happening with debasing of the US dollar, you should have more of your, funds or net worth in hard assets, such as real estate, such as gold, such as Bitcoin, and such as stocks, just because you need to protect yourself against this debasing. You need to protect yourself against your dollars losing value. You put dollars in a bank, it's losing 6 or 7% of its value every single year. In 12 years, that $100 that you had 10 years ago is not worth anything. So how do you protect yourself? Well, you protect yourself by pivoting or switching or accumulating hard assets. That's the only way. That's the only way this is going to happen. And as I said last Wednesday, not last Wednesday, a couple of days ago, Federal Reserve had a meeting last month, and then the minutes of that meeting came out on Wednesday, and Mr. Jerome Powell had a news conference, right? So what the Fed does is, they meet and then they decide to cut rates, not cut rates, what the future looks like. The expectation of future rate cuts are definitely coming down. Why is that? Well, that's because the expectations of inflation are going back up again now. And Fed had kind of taken a victory lap saying that, oh yeah, unemployment is fine, inflation is fine, economy is doing great, GDP growth is good. Then why are you cutting interest rates? If you don't see trouble ahead, why did you just cut rates by 100 basis points over the last 3 months? I've never seen it before. Fed only cuts rates when the economy is in trouble. Fed doesn't cut rates when the economy is doing well. So, but let's go with their shenanigans. And, gaslighter in chief, I call him. He was out there, he was saying, yeah, inflation is fine. But, so what they do is they issue a statement. And I always take a look at the statement and try to see what the differences were from the last meeting to this meeting, right? Because their words, the words they use mean a lot for future monetary policy. And I quite closely pay attention to what's happening there. So, okay, so what did the minutes say for last month? Okay, and I pulled it out, and there's a tell in here. So they're saying one thing, and then they changed their statement quite a lot. So and the market is reading this as, okay, these guys are saying inflation is fine. Is inflation fine? Do you guys think inflation is fine? Okay, is your buying power going a long way? Has your W-2 income or actual income or whatever type of income you have kept pace with inflation over the last 3-4 years? I don't think so. I think adjusted to inflation, the incomes in this country are down. There's no doubt in my mind. So what the Fed did is they sneaked in a new sentence into their statement, and here it is. So I filed the Coinbase letter. They do a fantastic job finding these things, and so Fed's target rate is full employment with 2% inflation, and inflation is coming down slowly, according to the Fed, and but they're not at the 2% yet. They're about today's inflation numbers were 2.8%. So, much better than the 5.6 that we were running a couple of years ago or a year ago, right? When the Fed went from 0 interest rates to 5.5. And okay, so what did the Fed change? So as you guys can see, they underlined they're in red. Whatever changed is in red, and whatever new is in blue. So they changed the statement language, and here it is with the arrow. They said they said stabilized at a low level in recent months, okay, which is unemployment, all right, and labor market condition remains solid, but they changed this next one. Inflation remains somewhat elevated. Well, that's a tell, saying to me personally that, okay, we were thinking inflation was fine. It's hanging around, it's lingering, and we may not be able to kill it. So we don't look for interest rate cuts in 2025, which the markets were forecasting 4 interest rate cuts in 25, in addition to the 4 that we experienced in 2024. Okay, and it doesn't look like we're going to get that. And the forecast now is maximum of 2 interest rate cuts in 2025, and inflation keeps hanging around. That may even not happening. So that's why we're getting this back and forth action in the stock market, right? The market's trying to make all-time highs, but every time something happens, we get some news and then it sells off. So the important thing for us to understand is how we do individually with what the Fed is doing, right? Is inflation better? Are we benefiting from the Fed moves? Is the Fed working for the American people, right? I mean, I understand Fed's hands are tied because Washington's fiscal policy is so messed up, so broken, that the Fed isn't kind of in a box, right? They have to balance it. They have to issue those notes, bonds, and bills constantly and pay higher interest rates. And I don't know. I don't think the average American is benefiting from the tax and spend, besides tax and spend, print and spend policy of Washington, and obviously the Fed decisions that go hand in hand with that. But if you disagree, put it in the chat. Okay, and there's something that's happening that I'm buying. I don't know what I'm buying. Oh, market's selling off, it looks like. Okay, sounds good, because I had some puts. One other thing that a couple other issues actually I want to talk about. As we all know, there's two trades that you can put together in the stock market. Okay, you can buy first, sell later. Okay, simple. That's a trade. Two transactions, one trade. Or you can sell first, buy it back later at a cheaper price. So let me run this again. So one is a long position, long meaning you can buy first, sell later. You buy at 1, sell it at 2, you made 100% on your money. Cool. The next situation is there are people who short things. Shorting means they make money when things are going down. Okay. And this is public information. So how does the shorting strategy work, right? As I've said it a million times before. What did I say? Stocks walk up the stairs and take the express elevator down. That's what stocks do. And so my thing is, I do short stocks quite often when I see something that's shortable. Like, for example, I shorted the nuclear stocks last week and made a ton of money. However, shorting is very risky. Why is it risky? Because a stock's upside is unlimited. Downside is limited. If you short something, it can only go to zero. It's not going to go negative, right? And so there are short sellers in the market. And a lot of hedge funds, two-way hedge funds, long and short hedge funds, do short things. For example, when Apple went from $260 to $220, that's $40. If you shorted Apple, you made money. And a lot of people think it's counterintuitive. They go like, how do you sell something if you don't have it? Well, you borrow it. That's how you do it. But there is a thing called short interest ratio that I follow closely. And but over the last 2-3 years, in fact, since the pandemic or since the great financial crisis in 2008, shorting is not paying off. Why is that? Because the Fed is there with their hands like this saying there's a put in the market. Shorting is not working out for the short sellers, and it's pretty evident by these numbers. Are short sellers giving up? Short interest as a percentage of shares outstanding on the S&P 500 ETF has fallen to 8%, lowest in 7 years. That means nobody thinks market's going to go down. All the shorts have covered. All the shorts have closed their positions. We're down into 7-year lows. Well, this could be a counter indicator, actually. So you guys need to pay attention to that. And in the NASDAQ ETF QQQ, short interest has declined to 7%, also near the lowest since at least 2018. And here's the chart. Here's the NASDAQ, and here's the S&P 500, and here's going back to 2018. As you guys can see, these spikes happen, short interest spikes happen, because when the pandemic was going on, market took a dump of 40-50% almost in like a couple of months, right? That's when you make money. That's when stocks walk up the stairs or markets walk up the stairs and take the express elevator down. So by comparison, in 2018 to 2022, the average had been around 14%. So these two yellow lines is the average, but this is the current short. Well, if the shorts are giving up, okay, if the shorts are giving up, is the market in a healthy situation, right? I don't know. I don't think so, because I think the market is actually, personally speaking, this year my prediction is market's going to go up probably 6% overall, and it'll be a lot more volatile. So the fact that there's not enough shorts and market starts going down and the shorts come in and start pressing will add to the volatility. So if you're if you're thinking things are going to go nasty, shorting again presents wonderful opportunities, right? You can short indexes, you can short stocks, you can short calls, you can do all kinds of strategies to benefit from the downside. You can buy puts, right? Limited risk. And from what I'm seeing on the option market, to hedge your long portfolio, the put premiums are so low. They are so low that I think putting on hedges would be reasonably intelligent thing to do. However, if you want to make net money, then you need to go short stocks and or indexes or futures, or there's many ways of doing it. And one of the reasons I think shorts are giving up on shorting is that there is something that counters that move, right? We heard about it, we know about it. It's called buybacks. So when Apple or Google or Meta or Microsoft, or even from, those are the mega caps, or Nvidia or Uber or whatever, all these companies, their treasury has buyback programs, meaning they are in the market, open market, buying shares in the open market. Now, a lot of people think it's hocus pocus accounting. It helps their accounting. I kind of agree with that part. However, when shorts come in and press, who's on the other side? It's the company itself buying back their own shares in the open market. And that kind of balances this downside. It kind of softens the downside as far as I'm concerned. And the important thing to understand is that, what does buybacks do? What do buybacks do? Okay, there is definitely benefits of buybacks to companies. And a couple of the major benefits are, there's a significant rise in buybacks over the last few decades. We know that. There is no doubt about that. In fact, when the market starts accelerating, going down, on the news ticker, you will see one after the other one, right? Increasing buyback shares, increasing buybacks, right? So what the companies are doing is they're creating immense amount of free cash flow. That's why Apple sits on 160 billion in cash in T-bills. That's why Meta sits in 100 billion in cash. Well, instead of doing other investments, what are they doing? They're buying their own shares back. Okay. And however, is it better for them? Because I guess they're not finding a proper investment for their cash hoard of hundreds of billions in dollars, right? Just in the top 7 companies, I think the cash holdings are close to $700 billion. And we're talking the Mag 7. Well, that's a lot of money sitting in T-bills, earning 3-4%, right? So they're seeing not worthy, but other than their own company stock, to come in the open market, support the stock price, and buy it back. So buybacks can help increase share prices. How? Well, more buyers than sellers, supply and demand. But especially on down days, it can put a floor on the price of the stock, right? And so the other thing that buybacks help is that a lot of executives have RSUs. RSUs are called restricted stock units. Those are like stock options. Well, by buying it back and pumping the stock, executives are benefiting from that. So obviously they're going to vote for buybacks. But I'm not against buybacks, but my downside on the buybacks is that they manipulate earnings. So what happens is that if a company has 100,000 shares, let's say, outstanding, and they're earning $1, right? That dollar is going to look a lot better if the company comes and buys the shares reduces the outstanding shares from 100,000 to 95,000. That dollar earnings now is going to be calculated on 95,000 versus 100,000 shares, right? So that dollar is going to look more. The dollar earnings are going to look better to Wall Street. So do they have an effect on manipulating earnings numbers? Yeah, I think so. But importantly, they put a put. There's like a put under the market. When a stock is tanking, even on bad news days. Okay, a lot of companies now. This S&P 500 is coming out with earnings this quarter. A lot of some companies are, have bad earnings, such as Microsoft did a couple of days ago, right? Stock went down 30. I'll bet you anything Microsoft was in there buying their own shares. If it wasn't that, it probably would have gone down 50, right? But this is what companies do. They reduce the share count. They make their earnings look better. Executives benefit from it, obviously, because there is support. So their stock options are not underwater as well. And, does the little guy benefit? Yeah, if you own shares and they're buying the stock back and stock keeps going higher, it benefits you as well. So two more topics, and then I'll answer comments and questions and share with you my position screen. So as we know, Elon Musk and Vivek Ramaswamy, I hope I didn't butcher his last name, but I call him Elon and Vivek team. What do? So they are the head of DOGE. DOGE is Department of Government Efficiency. Okay. Something caught my eye on Twitter the other day that DOGE is claiming already that they are doing a great job. So what's the job of DOGE? Let's say it's to find inefficient spots in the government and slow down the spending, slow down the frivolous spending or the fraud, so that our debt doesn't keep ballooning $1 trillion every 100 days. Okay, well, according to the DOGE, okay, Department of Government Efficiency, they're claiming that U.S. government, they're saving the U.S. government $1 billion per day, every single day. Wonderful. So let's break this down. According to the Coinbase letter, which does, again, I follow him on Twitter, fantastic job. So it's been exactly 1 week since inauguration. If Doge is saving 1 billion a day already, again, this is what the Doge is saying. Now, we need to fact check this, obviously. It's unprecedented, right? So let's assume they save 1 billion a day for the entire year one. A total of 365 billion through January 2026. Wonderful. In year 2024, the U.S. deficit came in at 1.8 trillion. This means Doge could reduce the U.S. deficit by 20% in year one. So if under the assumption that our deficit is going to be, again, 1.8 trillion and Doge can save 365 billion, that's 20%. That's wonderful. Now, is it wonderful that we still have $1.5 trillion in deficit and the debt's going to go up by that much? No. But it's something. It's better than nothing, I guess. So let's put it into perspective. U.S. spent $850 billion on defense spending in 2024. The savings would equal to 43%, 365 billion on 850 billion. The net interest cost this year is going to be $1.2 trillion on our debt. And we spent 882 billion in 2024 on average interest rate, with an average interest rate of 3.3%. So the 365 billion saving out of that percentage is going to be about 30%. Wonderful. The 10-year note yield is up over 100 basis points since the rate cuts began, and rising inflation and deficit spending worries. Yes, we get that. So if we cut this frivolous spending, okay, by Washington, and Doge does its job, maybe we can get this. Look, I'm saying that this debt, national debt, is never going to get paid back. However, reducing it first, I think, would be a good first step, or stopping the increases from going up by 100, every 100 days by $1 trillion. So FYI, the last U.S. president to achieve a budget surplus, which is very highly unlikely under Trump with his tariffs and with his cut the taxes proposals that are going to come up, it was Bill Clinton in 1998. So look, I am all for Doge, okay? I think it's needed. I think there's a lot of people who don't do anything in the government. I did a video last week. It's on the channel. Doge to the rescue, I said. Do you know how many people work for the federal government? Federal government is the largest employer in the country, and it's been going up through the roof, employment for the federal government. 23.5 million people work for the federal government in the U.S. Do we need 23.5 million to run this country? People to run this country? No. So my thinking is, I'm not saying I hope not everybody loses their job, but I don't think 23.5 million people are necessary to run this country. And we're talking every single department now on the federal government. Federal government is the largest employer, and it's been hiring at a 5% clip. Why do we need more people? And most of them don't go to work, right? Most of them sit at home, work from home. I don't think the country needs 23.5 million. I'm not wishing bad on people saying you should lose your job or do this or do that, but I think efficiency has been something that's lacking for a long, long time in this country, and I think it's about time that we pay attention to it. Again, I don't think it's going to solve the $36 trillion national debt problem. I think what it's going to do is it's going to slow the growth down, slow the deficit down a little bit, because that's when we need to just first slow it down, because it's out of control train right now. It's off the train wreck. It's just like a Cessna plane spiraling to earth. I'm like, we need to end this madness. We can't keep borrowing and spending. We just can't do that, right? And so hopefully Elon and Vivek are going to do a good job. And I will fact check that. It just came out. Their claim of saving the U.S. government $1 billion, right? We need to fact check it, and we need to figure out if it's true or not. So last but not least, I'm going to do this a weekly segment because, and I see a comment already about MicroStrategy. I'm going to do a weekly segment on MicroStrategy. MicroStrategy, as we know, under Michael Saylor, their CEO, is the largest corporate Bitcoin holder in the world. Okay. As of today, they are at 471,000 Bitcoin, worth about $50 billion. Last time I checked, Bitcoin was about 105K. Pretty close to an all-time high. But there's something happening to MicroStrategy that people have to understand. Last time Bitcoin was 95,000, MicroStrategy was at $540 a share. Bitcoin is 10% higher almost at 105,000. Where's MicroStrategy? It's about $350 a share. So what happened? Well, something called MNAV is getting shrunk on MicroStrategy. That's multiplier to net asset value. A lot of people question Michael Saylor. They say he's a gambler. I don't think he's a gambler. I think he's a genius. But that's my opinion. We'll find out if I'm right or wrong in the longer term picture. So MicroStrategy, what they do is they issue shares and buy Bitcoin immediately. Then they issue convertible bonds to be converted into shares at a much higher price later on and buy Bitcoin immediately. So that's how they have accumulated 471,000 Bitcoin. And for the last 11 weeks in a row, MicroStrategy has bought Bitcoin on the weekend. Okay. Well, now, this week, actually, it's going to come out. MicroStrategy is going to issue, FYI, the shareholders gave Mr. Michael Saylor the approval to increase the share count from 330 million to 10.3 billion shares on common. And they gave him the authority, or the company, the authority to raise new, 1 billion shares of preferred stock. So I think Michael Saylor's strategy is this. So they already had the approval on the convertible bonds or notes, share sales at the market, share sales, convertible notes, and now preferred shares, preferred stock. It's called perpetual preferred shares. Okay. So he's creating this financial supermarket for all other institutions who cannot legally in their charter are allowed to go buy Bitcoin. Okay. But you can come buy a MicroStrategy convertible bond and he's going to go buy Bitcoin. So he is your proxy. And MicroStrategy and Michael Saylor is your proxy as a corporate entity to invest in Bitcoin, because they're all immediately going to go buy Bitcoin. He's doing that at the market stock sales. He's doing that with convertible notes and bonds. And now he's going to do it with preferred stocks, because there are companies that can only buy bonds. Well, he created that model. Okay, you can come buy some of my bonds and I'll go put the money into Bitcoin. You're not directly participating in Bitcoin, but indirectly, you're participating in Bitcoin by owning the convertible notes. Now he's going to do it preferred shares. There are companies who cannot touch bonds. There are companies who cannot touch Bitcoin, but they can only invest in preferred shares. Well, that's what he's doing now. So according to Wall Street, here's the last bit of financial tools that is going to come, MicroStrategy is going to present. So they're issuing 8% preferred, perpetual preferred, coming on Thursday. This coming on Thursday, in 4 days, and it's going to trade under a different symbol than MSTR, right? It's going to trade as STRK. I'm pretty sure that's going to be the symbol, but I'll double check and get back to you guys on Monday on that. So why is MicroStrategy issuing preferreds, right? The company, the largest corporate Bitcoin holder with nearly 50 billion in the cryptocurrency, wants to diversify its funding sources to buy Bitcoin, because some companies cannot buy Bitcoin. And that's why he's facilitating through MicroStrategy for other companies to go indirectly invest in Bitcoin. The deal terms for this perpetual preferred shares that he's going to offer, this tranche is going to be about $250 million. The preferred will carry an 8% annual dividend and convert into MicroStrategy at a stock at $1,000 a share. Think about it. It's triple from here, okay? So this is all based on under one rule, one condition. MicroStrategy is a proxy for Bitcoin. MicroStrategy moves up when Bitcoin moves up. Bitcoin moves down, MicroStrategy moves down. Period. There is no ifs, there is no buts. If Bitcoin is going to go to 200,000 this year, MicroStrategy should double. Maybe not as much as a double, but maybe a little bit less than that. So Mr. Michael Saylor has found the infinite money glitch on Wall Street, and he's coming up with all these new products for others using his company to invest in Bitcoin. Should you do that? No. What I do is that I do not trade Bitcoin. I said this many times. What I trade is the surrogates of Bitcoin, proxies such as MicroStrategy, such as MSTU, which is the 2x ETF, MSTZ, which is the 2x ETF on the downside, and those options that they have. In fact, those may have been the pings or dings, because I shorted MSTU puts this week. I shorted the 9.5 puts, 9 puts, and 8.5 puts when Bitcoin pulled back to 92,000. So every time Bitcoin pulls back to 92,000, 93,000, 95,000, I start selling puts on these cash secured puts. Okay, because I'm thinking Bitcoin is in a trading range between 92 and 110, just like it was in a trading range between 52 and 70 for 7 months. And when it broke out, it went to 110. I think the same thing is happening now. So as long as we're in a trading range, I'm going to sell puts every time Bitcoin goes down to 92. I'm not going to sell Bitcoin. I'm not going to trade Bitcoin. I'm going to go sell the proxy of MicroStrategy, which is the 2x ETFs or MicroStrategy itself. And that's my intent. And when it breaks out, I'll leave it alone. But at the moment, I'm creating quite a handsome cash flow with the options on MSTU by selling puts, selling calls, collecting premium, and because money is sitting in the account cash anyway, so what's the point of just having it sit there? So not too many comments. So good morning to everybody. If you have any questions and comments, please put it in the chat. I will definitely answer them. Doesn't seem like there is too many. So I'm going to add this to the screen. This is my account, and my account is full right now. I have a lot of positions going on, but let's see what those pings and dings were, and we'll figure it out. Okay. All right. So what do we have? What's going on? Okay, I added to Billy, obviously. Okay. Okay, so let's start at the top. I have 15,000 shares of Werewolf Technologies. I'm trying to sell calls. I sold some calls against it this morning. Not this morning, this week. So this is one of the positions I'm creating on Bilibili, which is the Chinese YouTube, I guess. And not I guess, it is. So I'm trying to accumulate a position. So what I'm doing in this one is I'm doing a debit call spread, call debit spread, meaning I'm buying the April $30 calls I'm buying the April $20 calls and selling the $30 calls against it with about 95 cent debit. The other thing I'm doing, I'm intending to buy Billy, BILI is the symbol. I'm selling the March 17 puts and buying the March 20 calls. So that's called a synthetic long. Okay. That's what I'm doing with Billy. And with Baba, I'm going to do it as well. I have 150 of the, again, debit spreads on stock called KULR, Cooler Technology. They also do what Michael Saylor is doing with Bitcoin. Okay. Which is buying Bitcoin with their as a treasury asset. I have the 2.5, 7.5 spread stock is debit spread stock is 210. I have 5,000 shares of RB Robotics. I accumulated about 286 range. I sold some cash secured puts, but I'm also selling some calls, cover calls against it, expiring in April. I had KITT, Nauticus Robotics. I bought it and sold it the last 2 days. It was a great trade, actually. There we go. Okay, so I bought all these back. So I was short the MSTU MicroStrategy puts. And so there we are. MicroStrategy puts are expiring, all worthless. Stock is 965. I bought them back all 5 cents. So I had sold them. I had sold the 9.5, 9, and 8.5 puts. S&P 500 is definitely selling off. That's where the dings were. I sold my puts that I had bought actually this morning and yesterday at the close. And last but not least, I bought the puts again on the nuclear stock called Oklo. Made great money, made like a triple, quadruple on that actually last week. And it rallied all the way back to an all-time high. Now it's correcting. Yeah, I'm long the puts there. So I'm kind of quite balanced actually. I like the way the account is setting up, and then I will share it with you all on Monday, where the account stands as of the end of January. I'm quite pleased actually with January, but the day has not ended. The day has not ended yet. And if you guys have any questions about specific stocks or other issues without being financial advice, I'll give you guys my opinion, obviously. So I saw one that I need to answer. Let's answer this question. All right. So good morning to everyone. Crystal says, I got assigned MSTR today. Really? Okay. I will be selling above 50 current price each week, earn premium on cover calls. Okay. The premiums were much better, to be honest with you. You should become a member, Crystal. You'll enjoy that. The premiums were amazing. Actually, initially when Michael Saylor started doing this, when MNAV was at 2.5 to 3, was amazing premiums. Now, not as much, and implied volatility is also coming down, but still much better than anything else out there. So you should definitely be looking into selling, those cover calls. Sean, hello, Sean. You got to come to one of these meetings, Sean. We had an emergency meeting yesterday, buddy. Do you think it's a good time to sell off some of Baba? No, we're buying Baba. I think you'll regret it if you sold it. I like Baba, I like Billy. I'm buying all these. Yeah, I wouldn't do it. I wouldn't sell any of the Chinese names. In fact, I will add to it if you have more cash. So with that said, since there are no questions, let me go share some of the charts that we're looking at. Let's go to that and go through a quick watch list, to be honest with you guys. And let's see what we have. All right. Well, yeah, market's selling off hard, actually. There's quite a reversal that we're experiencing here, which is interesting. Am I getting hurt? No. Okay. No, I'm doing fine. No problem. Okay. Yeah, Billy pulling back, giving me a chance to get in. I like it. Actually, I did do pretty much everything that I'm going to do. I'll add it to my vertical call spreads, which is good. Okay, those are the April ones. What else do I have? Yeah, that's the only thing I did not execute. Okay, cool. So I'm very bullish on the Max 7 of China. Let's look at some charts and then you guys will understand why. So this is the S&P 500. Uptrend, retested the high. Don't see anything negative, honestly. I honestly don't see anything negative here. Oh yeah, we are selling off actually. This is a 2-minute chart. So we'll see if we can close green today. But we just turned red actually for the day. So hold on to your horses. S&P 500 is still in an uptrend. Not as strong as before, but doing okay. Triple Q, same thing. There's 2 stocks under Triple Q that are really, really acting pretty nastily, which is one is Apple. Apple's earnings came out. They were okay. Okay, gapped it up this morning. It turned red now, putting a reversal day in. And the other one that's acting really bad is NVIDIA, down already on an up day. And Meta is doing great. Microsoft broke down. I mean, Microsoft is under its 200 EMA, which is not great. AMD has been acting horribly, actually. Under its 200, under its 50. If you have any questions, please put them up. So here's why I'm bullish on, it's pulling back now, but on Baba. I mean, Baba went from 80 to 105. Now it's, having a little correction at 98, down about $4 today. Stuck in the upper band of the Bollinger Band. So this is the point I'm trying to make. All bad news, stock is not going up. No good news, stock is going up now, right? So I'm bullish on these stocks. I'm bullish on that. I'm bullish on JDSU. Look at those. I mean, right? And bad news, the stocks are going up. I'm bullish on Billy, BILI. On pullbacks, I will add. I mean, yeah, I like these names. And let's see what else is going on. Carvana is making a new high. Wow, that's interesting. If you have any questions, well, close to a new high. Another one that's making, I think, a new high. Yep, Palantir is making an all-time high today. Earnings are out, I think, on that on Monday. Don't like it. Don't like that. Don't like the. I like the stock. Don't get me wrong. Don't like the valuation at the moment. So what else is going on? Let's take a look. Yeah, Meta new highs. I mean, unbelievable. What a stock. Look at that. It's upper, higher highs, higher lows. Bitcoin, as you guys know, this is MSTR, MicroStrategy. Just going sideways until moving averages kind of relax a little bit. They keep buying more Bitcoin, man. If Bitcoin goes higher, this thing is going to go higher. There's no ifs and buts about it. Don't trade Bitcoin. Trade MSTR, trade MSTU. This is MSTU. We'll turn around and start selling the puts again on Monday. Cash secured puts, the 9.5s, 9s, 8.5s, depending on where it's at. It's turning into quite a bit of an ATM machine for me. But then, of course, everything in moderation, carefully. Here's Oklo. Let's see if we can close that garbage down today. Okay, well, it's only up 82 cents. So it made an all-time high, non-confirming. So I bought some puts. I bought some actually March 25 puts, believe it or not. What else? I mean, there's like all the quantum stocks. We know what happened there. They're all going nuts, up and down, up and down. They're like a yo-yo. I'm just taking certain positions and just kind of allowing them to work for me. That's it. That's all I can do. But then please come back on Monday. If you have any questions, put them up. But please come back on Monday to see my January results. We'll see where they're at. Future looks bright. Believe in Doge. Yeah, yes, sir. Definitely. Are we still going to do the options on RH that we can do at level R Say it again. Are still going to a I don't know what that means, but I guess yes. And Vic says that's why you buy puts. Yeah, I agree. I mean, depends on what put you're buying it. Depends on implied volatility, depends on everything. I mean, sometimes the market maker makes it really hard for you to make money on puts. So, yeah. But if there's no other questions, I'm going to say goodbye and watch the expiration today because I have a couple other positions that are expiring. Join me on Monday. Monday should be fun. If today they're, turning the market around from green to red, Monday may be interesting, actually. So, all right, we'll see you guys on Monday, every Wednesday for the members, every Friday, again, for the subscribers. Thank you for the support. Please put a thumbs up. Please consider subscribing. Please share. Please consider becoming a member. I think you'll get 100x your money's worth. And you get a free t-shirt, $30 value. Free. I don't know. I think it's a pretty good deal. So, thumbs up. Thank you. Stay healthy. Be safe. I will see you guys on Monday.